Yeah. So, to just set the context for the people, all of you are existing investors of LiquiLoans, so they are aware about the basics of P2P investments. But just to set the tone, as I said, for the benefit of people over here, LiquiLoans, as per the current fact sheet, the latest fact sheet, the total disbursements done by LiquiLoans till date since inception is more than 1,750 crores. Last month, that is the month of September, they did a total lending of 160 crores. They have total close to 4,85,000 borrowers on the platform, and almost close to 41,000 lenders like you on the platform. LiquiLoans on a gross level earns close to 23% XIRR on the lending, out of which it delivers 8 to 10% depending upon which scheme you are opting to the investors. And phenomenal record what LiquiLoans has is it has 100% track record of delivering the withdrawals, that is the principal and interest on time, including the monthly interest. So this is the latest numbers what LiquiLoans talk about. So we will open the entire session for the people to ask the question. But before we start getting questions, one question to you, Sandeep: how is the lending looking like, and how is the business looking like?
So, sir, in terms of the type of borrowers that we evaluate, right, there I see a couple of things happening. Because the question always comes, is this a scalable model? Because you're only looking at cream borrowers, right? You're looking at borrowers with CIBIL scores in excess of 700 plus, salary in excess of 9-10 lakhs plus, right? So how scalable is this model is generally the question that we get all the time. I think it's a very scalable model. And the reason why I say so is that, A, if you look at consumption in India, right? Consumption is in India is ever increasing. And B, at the same time, even though salaries are increasing, the credit to GDP ratio also remains the same, right? Even though it's not that people are spending money that they don't have. Because they are earning more, they are also spending more, right? And we are saving at the same level, right? Not that savings has gone down and we are spending more money, right? Savings has remained the same. In fact, savings is increasing. Right. And while at the same time, average salary is increasing, so consumption is also increasing to that extent. And typically, if you look at the segments that we are in, which is healthcare, education, home decor, right? Now, these are segments which are growing at almost, I would say, 50 to 60% growth year on year, more or less, right? You'll see the 40 to 60% growth. Just you see in terms of number of outlets, the number of brands that are coming up in these segments, right? There is almost a 40 to 60% growth that you see in these individual segments. Now, breaking it down individually, for example, if you look at education upskilling, right? That is the only segment where you see significant growth, which was seen during COVID, right? During COVID, education was the one sector which witnessed a phenomenal growth in terms of number of users, right? And now what has happened is that education has become more of a necessity than a fad, right? Upskilling education. So now, the reason for that is most of us, I would say, have some sort of higher sort of learning degree. Now we can't go back to school or college again, right? To get a better job, right? I mean, for example, when I graduated NMIMS in 2013, the average salary was around 10 lakh rupees. Today, the average salary is around 22 lakh rupees. Now, I wish I could go back and redo it, but you can't do that, right? The only thing you can do is upskill, right? MDs and CEOs of companies are upskilling. So obviously, everyone is looking at upskilling as more of a necessity, and it's gone beyond the fad sort of growth phase, right? It's become a necessity to upskill. If you look at healthcare also, you typically see people wanting to be more healthy, looking at certain treatments, natural treatments, or whatever it may be to maintain a certain level of health, right? Now we want to be healthy. We know the long-term benefits of being unhealthy. More sort of information is spread about why you should maintain a certain level of health, right? So even healthcare as a segment is growing very, very rapidly, right? Okay. Especially discretionary non-fatal healthcare, right? And also home decor. People are buying more homes. People previously, what used to happen is that you used to have in certain areas, you used to have certain interior designers who would work, right? And you would refer the sort of same person, and the same person would come, similar sort of carpenter, same tiling person, everyone could be typically the same, right? Now it has become a more of a, I would say, deconcentrated sort of situation where there are companies like Live Space and Design Cafe that are coming in, offering you sort of solutions here, right? That, hey, if you have a budget of 10 lakh rupees, you just don't have to do it from your neighborhood carpenter or interior designer. There are these options, professional options also available for lower cost, if possible, right?
So currently, how much in terms of percentage, how much is going through the zero cost EMI, and are we also exploring the newer segments for lending?
So, sir, I would say that I would still typically 2/3 of my book is still in zero cost, right? I would say that, yeah. And typically I would say 25 to 30% is in the fintech segment. And I'm sure you and your investors would be aware of the fintech segment also, where do you want me to throw some light on that?
Yes, please. Yes, please.
Yeah. So typically these are well-funded, very well capitalized, good founder pedigree companies who are into some sort of lending. So there are companies like Zest Money, Moneyview, right? Nira, right? These are all well-funded, 100 million plus valuation companies, excellent founder pedigree, but doing some sort of lending, right? Where we are not in that same space. It could be some sort of a personal loan. It could be no-cost loans in some other segments, right? Where we are not comfortable lending, but we are very, very sure of the team, the business, the underwriting, and we are okay with taking some amount of risk there. And in fact, we are not taking any risk there, right? And I'll tell you why the risk is typically covered. Now, how you have unsecured loans and no-cost loans, these are actually secured. And the reason why they're secured is, for example, we have a preliminary analysis of the NPAs that these companies generally have. For example, if it's a 1% NPA or 2% NPA, there is almost a 4 to 5 time cover that we take before itself. For example, if I have to disburse 100 rupees of loan, that means first you have to put in 10 rupees with us. This is standard practice. This is known as something known as FLDG, where RBI had come in with regulations where it can't go beyond a certain number. And we've been maintaining that number between 5 to 15% from the very beginning of this company, right? So these are legal, good sort of practices to have from the very beginning itself, where we take some amount before in terms of, like, say, 3 to 4 to 5 times exposure of NPA, and plus the remaining is actually guaranteed by corporate guarantee, right? Okay. So even if there are any NPAs in those portfolio, it will be sort of it will be made good by that company.
Okay. Okay.
So there is actually no risk in these sort of loans.
Understood. So Sandeep, I've got a lot of questions from our clients, but first preferences for the people who are over here.
Okay.
So all of you, if you have any questions, please unmute yourself and ask question in English, Hindi, Marathi. Please be free. And the questions could be anything, because you are already existing clients, you have seen the system, you have seen how the allocation of your fund has happened, you have seen how much returns you have generated. So if you have any questions, please feel free.
Hi, this is Sunil. Hi, Swapnil. Sorry, I joined late.
Hi, sir. Hi. No issue.
Hi, Sandeep. Sandeep, so just want to understand how are these products attractive for NRIs? I'm an NRI, and just give some background. Now, a typical fixed deposit, a simple FD product will also gives me 7.5%, and if I keep it in an NRE account, it's like tax free. Okay, and if I compare this to a liquid loan product, which gives me 9.5%, 10%. After tax and all of that, I reach to the same return, and of course, there is a small amount of risk also. But so if you could just convince me how this is a product which even NRI should subscribe for.
So I'm saying, sir, that from the very beginning, we've been of the opinion that, within fixed income, around 90% of your money should go to well-established.
You.
Am I audible?
Yes, Sandeep, you are. Please go ahead.
Hello.
Yeah. So, sir, I'm saying from the very beginning.
Sorry, Sandeep, I lost you. Yeah, I can hear you now.
Yeah. So I'm saying from the very beginning, now we've been of the opinion, right? And this is not something that I'm saying for the first time, that 90% of your income anyway should be in traditional products that have delivered returns for the last 20, 25 years, right? Now, there is always a 10% sort of room in your portfolio, and that we've seen specifically post-COVID, where there is some sort of room to add newer products as well, right? And rightly said, right? Even even though you might be getting, same return as in your typical FD product because of certain NRI benefits. What we're saying is that we'll come up with new products, and currently we have a liquid product at 8%, which is sort of unmatched in the market, right? So there will always be some sort of role for liquid loans in your portfolio, depending upon your short-term, long-term investment needs. So I'm saying just in terms of diversification as well, because we keep harping on diversification. For purpose of diversification as well, this becomes a good sort of product to add, right? Because within fixed income, I'm saying 5 times exposure to 10% exposure to something like this makes a lot of sense.
Okay. So it's more on the diversification
absolutely
side.
Absolutely, sir. I'm saying that if you look at typically, and I'll tell you where I'm coming from, right? A lot of times what happens is that people feel that there is a lot of risk attached to something like this, right? And that is why where the whole risk versus reward conversation also comes, right? Correct. There are products offering 7%, 7.5%, 8%. Then why should I take the risk and put something in our product, right?
Correct.
So I'm saying that for me, when I look at it as an outsider, I mean, forget that I work in this company or have anything to do with this company. I'm saying if you look at the basic fundamental business model, is giving out small loans for short tenures to salaried individuals living in metros, right? Now, as a business model, inherently, actually, there is no risk here because this is the safest business model that you can do.
Correct.
Because within lending itself, I pick the best borrowers, give them small duration loans, small amounts. It becomes the ultra safe proposition, right? And these are borrowers with CIBIL scores of excess of 700 plus, right? So as a business, actually, there is no risk. Now, I agree that there are other risks like startup risk and market risk and all of that is there. But as a business model, that's why we try and reiterate that it's like, investing in like a large cap, mid cap or small cap fund. You're investing in blue chip, large cap borrowers, right? So as a model itself, there is no risk. And we believe these returns are more or less in line with the risk itself, right? So that's why I'm saying 8 to 10.5% where we are taking the risk, where we take the NPA hit, where the investor gets paid out on a first come first serve basis. I think is fairly sort of reasonable return in my opinion.
No. See, I mean, the return surely is there. I mean, surely, but then just because of I'm thinking it differently. So just wanted to understand. But I get your point. It's more just to have another product in your in your basket.
Absolutely, sir. Right. I mean, see, markets keep fluctuating. Markets keep moving up and down. Right. Yes. This is a product which is sort of fixed return. Right. When you invest in an 8% product, you get 8% no matter where the market goes. So some portion of your fixed income can very comfortably move into something like this.
Right. Okay. And then just to get into some more basics. So this is so maximum is what 8 to 10.5% is what you're saying. And you as a company, what is the what is the gross percentage, if I may ask, you make so that of course even you need to have a share.
Sure. So I'm saying NIM, which is my net interest margin, is somewhere in the 3 to 4% range. I typically get around 3% NIM is what I typically make, and that is required for me to run this company profitably because we've already turned profitable in late 2020, and it has always been our endeavor to not typically raise funds if it doesn't require it, right? The business generates money and that money goes back into the business, right? So typically, like other fintechs and sort of NBFCs, we don't want to raise too much of money because then there is pressure to deploy and get into segments that we are not very comfortable with, right? I'm saying in order to keep this business running as is and maintain the pristine sort of nature of the borrowers, then 3% NIM is something that I need to sort of run this business effectively and efficiently.
Okay, got it. And see, currently with the base rate changing, sorry, maybe the last question, I don't want to take the whole time. The base rate changing, has this returns increased? Because now a housing loan is 9.5%.
I agreed. So, sir, see, it is again from the very beginning. It has been an endeavor that you should typically get between 200 to 300 bps above typical fixed income option, right? If they are at 5 to 6%, you should be making 8 to 9% here, right? That's been the aim. So as and when rates are increasing, for example, if now Bajaj Finance FD is at 9%, then I no longer become attractive, right? I need to move to 11 to 12% to gain garner some interest from you. So as the rates change, it may not be a knee-jerk reaction. It's not that if rates go up today, that I will increase my rates tomorrow, but gradually over a period, 6-month period, it will go up.
Okay. But then they are variable. So the underlying, your agreement with the end customer is variable. So that if the rate changes, you pass on that increase to investors like us.
So so for example, if you invested in, let's say, I'm just giving a random example. If at 12%, if I'm giving you for 12 months, it's at 9%, but you can't withdraw that fund, right? It's not that tomorrow, if I'm giving 12 months at 9.5%, 10%, that you'll shift to the 9.5%, 10%. Newer customers who are coming in obviously will get those rates. Or if you're in liquid and you choose to shift to lock-in, then you'll get those rates. But in products where there are no withdrawal possible, you will not get an increase in rates.
Okay. Got it. Okay. Thanks, Sandeep.
Thanks, Sunil. Also to add, Sunil, one more point over here. LiquiLoans, which gives in their fact sheet, the gross XIRR or the gross earning, what they earn from the lending is 23%. That is their gross XIRR, what they earn. Out of that, obviously, there are certain costs involved. And then the net interest margin, as Sandeep said, is close to 3 to 4%. And the remaining is with the investors. So on the gross level, LiquiLoans earns 23%. Right, Sandeep?
Okay. Yes, sir. Yes.
Okay. Got it. Thanks, Abu.
Any more questions?
Yes, Swapnil, actually, sorry, Jitendra here.
Yes, Jitendra.
I wanted to hear that only, but now it has been clear what Sunil said. So normally, if it actually for a specific period, if LiquiLoans is giving 12%, 8 to 10%, right?
Correct. 8 to 10.5%.
8 to 8. But the duration is fixed. Like if you are investing for 12 months, so you cannot, I just have a doubt, you cannot withdraw in between that. If I have invested lakh of rupees, but the interest.
No, sir. No. Okay. No, because this is then it becomes so lot, and why we've kept it like that, people typically withdraw, put it in equity markets and stuff like that, right? So unless it's
I just had a doubt.
Very critical medical emergency which we will allow, typically we don't allow.
Okay. Got it.
So this is one more question which has come to me several times. How does LiquiLoans manage the asset liability mismatch? That at one end you have clients who are giving you money for without lock-in. वो पैसा महीने 2 महीने में निकाल सकते हैं ना. At the end you are lending average for 11 months. And obviously, you also have certain borrowers who have borrowed for say 24 to 36 months. So how do you manage this? And especially where there is so much of activities happening, people borrowing, people also withdrawing money in between. So how do you manage this?
So actually, sir, it's the other way around. So typically, if you see my investments are greater than 1 year, while my loan tenures are less than 1 year. So we are in a positive situation there as compared to banks where it is the other way around.
No. Can you just repeat this? Sorry, can you repeat this point?
I'm saying my average sort of investment period, right, is close to around 15 to 18 months, while my average loan is around 10 to 12 months. Okay. So already I'm in a sort of net positive situation there where I have better coverage possible, right? Typically, if you see my liquid was a lock-in sort of what would I say number? This is 30% is in lock-in and 70% is in lock-in and 30% is in liquid, correct? Okay. Is at any given point in time. So that means theoretically 30% of the borrowers can come in and ask for a withdrawal on one single day, right? So then what do we do, right? Do we have enough cover for that? So typically what happens is that out of 100 rupees that you invest with me, around 90 rupees is what I disburse. 10 rupees is in cash in the escrow, which is obviously a drag on my P&L, but because I have a liquid sort of scheme, I have to make provisioning for it, right? Just like banks have to do it. We don't have to do it, but we will make provisioning because I have a liquid component, right? Also, if you see, 15% of my repayments come back to me month on month, right? So out of the 30%, I can cater to 25% at any given point in time, right? The remaining 5%, or I would say 85% almost is covered here. The remaining 15%, right, obviously will get their monies back when the borrowers pay back, right? So if there is that black swan situation, if there is a run on the bank, I am actually better placed than banks, because I have shorter loan tenures and longer investment periods, and B, I have enough and more sort of liquidity available for you to exit as well. And I'll tell you, during COVID, typically my book is redeemed 2 to 3% on a month-on-month basis, right?
Okay.
During April, May, June, and not June, it was slightly less, but April and May, it was 2020, it was redeemed 10% and 12%. Everyone who had invested in LiquiLoans got their money in T+2. There was not a single day delay in paying out investors.
Okay.
So we've seen the worst of times also where this has come into play. Actually, we just keep talking about that this black swan event can happen, cannot happen. So we have seen everything. We have seen DHFL, INFS prices. We've seen COVID. So we've seen all of these things play out.
Okay. I'm just waiting in between for people to ask questions. I have, as I said, a lot of questions with me, but I'm still waiting.
Sure.
Are we seeing any upward trajectory in the NPAs? Though I keep a track of the NPA numbers, it is just 0.23% for the month of September.
Yes, but those are RBI estimates, sir. It is actually 0.63% as per our estimate. RBI estimates, RBI estimates are very, very conservative. They don't take into account any loan greater than 90 days, right? So 90 days tak to aapko anyway kami default hota. Generally in most situations, right? So those are super sort of aggressive numbers. Conservative, sorry, to put it the other way around. That is not telling you the entire story, right? Typically, my NPA is around 0.63% currently, right? And if you ask me, again, this is my personal opinion, that means there is still money being left on the table. And what I mean by that is that I'm being too conservative in my underwriting. Because at 0.63%, there are a lot of borrowers who could have been given loans, but I have not given. Obviously, because when I'm establishing my credit and I've established the company for a period of five years now, I have to have been conservative, right? But I typically believe that this sort of till 1 to 1.5%, it is comfortably doable, right? If you look at Indian retail lending NPA numbers, history, right? It has always been in the 1 to 2% range, right? During COVID, it was around 2.5 to 3%. But it has always been, banks typically you see, always in the 1 to 2% range for their retail lending books, right? Me at a 0.63 is still leaving a lot of opportunity out there to get good quality borrowers as well. So the NPAs currently are not inching up, but I'm saying 1 to 1.5% comfortably is something that we can live with. And also the good part about these NPAs is that they will not suddenly come on your books, right? You will see a upward trajectory, like you said. 0.63 will become a 0.8 to 1% to 1.2%. It will not go from 0.63 to 1.5% in 1 month, 2 months, 3 months. It will take typically 9 to 12 months for this to play out, right? Within that period of time, obviously we can do some correction, right? Maybe we're looking at some wrong quality of borrowers, some wrong dealers, looking at some segments where, NPA numbers have increased. So we can, those correction mechanisms are always available to us. So my personal opinion.
So you are saying that up to 2%, up to 2% of NPA investors' money is 100% safe.
It is actually safe up to 13%, right? But there is already inbuilt. Yes. There is already inbuilt provisioning for 2%. You don't have to do anything. 2% ka to already humne provisioning karke rakha hai, right?
Okay. So briefly, can you explain the 13% mathematics? How till 13% you're saying that it is safe? 13% of NPAs.
So 23%, like you said, is what I make.
Right.
Cost of funds typically for partner plus investor milake is around 11%.
Right.
NPA provisioning is around 2%. Okay. So that is 13%. Now, because this is a high churn business, right? Consumer loans continuously you have to keep churning, because to disburse 1,000 crores, I would require 10 lakh, 20 lakh borrowers. SMA kal utke 1,000 crores I can't give to a single entity. Also, you will see that my approval rate is around 50 to 60%, right? So there'll be 100 people that I have to pull CIBIL score for to do the underwriting for, to sort of analyze, but main doonga 50, 60 jan ko ye, right? But I have to amortize these costs over 100 of these borrowers, right? So typically you will see that any consumer lending business, ops costs are slightly higher than corporate lending. By slightly, I mean it is significantly higher. But So I'm saying ops cost currently for me is around 5-6%. So 13 to 5-6%, that gives me around 18-19%. Typically 5% is gross, 3% is net in hand that I will get, right? So in theory and in practicality also, because it is written in the agreement, if you are making 8 to 10%, I'm saying 13% तक का NPA तो मेरे को ही bear करना पड़ेगा, right? तो मेरे profit से आए, ops cost से आए, कहीं से भी आए, I have to make good 13% का NPA buffer, right? So that is what I'm saying, that because there is already a provisioning for 13%, investors will always be on the safe side, because then I have to think very, very carefully before I get into newer segments or I underwrite more risky borrowers, because everything else after that comes out of my fees.
Right.
Collections is not efficient, NPA goes up, it comes out of my fees. Credit is not efficient, NPA goes up, it comes out of my fees, right? So I'm saying I'm 100% aligned to investor, and that's why I think the beauty of this product, where the beauty of the product lies, is that typically hurdle rate products and all these other products also, you'll have some sort of performance fee, right? Here, my performance fee is solely dependent on you making your returns, right?
Right.
So it's not like mutual funds जैसे मैं NAV कम करके मैं आपको दे दूंगा, but performance fee management fee तो मैं ले ही रहा हूँ. This I can't do any of this here, because if you don't make the first set of returns, I make nothing.
Right.
So 13% तक का NPA buffer है, and in my personal opinion, 2% तक का NPA we can very, very comfortably absorb, and we should be slightly more aggressive. There will be, so you will typically see worst case 1 to 1.5% के बीच में, उससे ज़्यादा तो there is absolutely no possibility for those sort of NPA numbers to come in.
Okay. Okay. Yes, people. Do we have questions?
Sandeep, just on the same topic. Sorry if I can ask one more.
Yeah.
I'm actually was confused with the numbers. So see, a simple question for me as an investor is, till what percentage of NPAs you can absorb? You said 13. Did I hear that correct?
Yes.
So till 13%, and an average Indian retail business, 2% is the average NPA is what currently, I mean, you're saying.
Absolutely. Yes, sir. Yes. Bajaj Finance is at the point. In fact, their NPA is lower than us also. But I'm saying typically it's in the 1 to 2% rate.
Okay.
And again, the point is that only, right? I'll tell you here. So we discuss this almost on a daily basis, that someone on the other asks this question: ki unsecured versus secured, right? These loans are completely unsecured, right? So then, what is the safety for this, right? And why are these numbers still in the 1 to 2%, right? The reason for that is, the question should not be whether it's secured versus unsecured. The question should be is that what is the duration and what is the loan amount? Typically, you'll see. So I'll give you numbers. CIBIL data from 2016 to 2021, right, tells me that secured loans in India have a higher NPA than unsecured loans. Secured loans, which is home loan, loan against property, auto loan, and business loan with collateral, has an NPA of 2.5%. While unsecured loans, which is personal loan, credit, outstanding consumer loans, has an NPA of 0.9%. Right? The point I'm trying to make here is that small ticket size loans to retail salaried individuals in most cases, you can still, expect that they will pay on time if there is some sort of a job loss, or there is COVID that happens again, or if there is some emergency in the family. Typically, you will have 50,000 to 1 lakh rupees in emergency funds also, right? So something which is a 50 to 70,000 rupee loan amount for less than 12 months, you will pay off easily, because just by sitting at home and not traveling for your work, you are still saving 5,000-6,000 rupees on a monthly basis, right? But something like a home loan EMI, 1, 2, 3 lakh rupees in Bombay, the people are paying 5-6 lakhs also sometimes on home loan. That's very common nowadays, right? So these sort of loans become very, very difficult to service, right? If you don't have a job, your emergency funds also will only account for a certain percentage of that, right? So that's why, these larger loans for longer duration, there is no clarity. 20, 30 years, you're taking a bet on an individual, which is okay. I'm not saying there's anything wrong with that. But the point here is that if any untoward situation comes up, and COVID has all taught us that, right? That these sort of loans and these sort of borrowers will always pay on time, right? And now I'll give you another example. Typically my NASH success rate is when the borrower signs a NASH mandate with me, when I present that NASH, my success rate in the first month is 97%. right? That means 97 out of 100 times people have money in their account, right? This during COVID fell down by only 3%, which is 94%, right? Which was a very, very sort of eye-opening number for us. Is that these sort of borrowers, they are still keeping money in their bank for these loans, right? While the same number for an HDFC or a Bajaj Finance was in the 70 to 80% range. Their NACH success rate almost dropped by 20-25% because people didn't have money to pay, right? So typically that we've seen that good salaried borrowers, these sort of loans always will have money in their account.
Okay.
So, and also because NPA numbers are then become very, very predictable that 1-2% के ऊपर तो हो नहीं सकता. मतलब if I'm in the same universe, I'm underwriting the same set of borrowers, standard deviation can be 1 or 2% higher or 1 or 2% lower. It can't be, I can't be 10-12% NPA and Bajaj Finance will be a 2% NPA. That's practically impossible, right? So there is enough and more buffer, right? There's almost 13% buffer. Even Crystal and ICRA have opined that worst case NPA for our portfolio. They've done an estimated credit loss on our portfolio. They say worst case NPA will be between 1 to 2%, right? So I'm saying there is actually 600 to 700% buffer for something like that. Even if I were to underreport my NPA numbers, let's assume that 0.63 is not correct, 1% is not correct, 2% is not correct. It is actually 6%, 8%. So my 22 to 24 will become a 14 to 16, but you will still end up taking the first 8 to 10.5%.
Okay.
So there was this question from one client कि industry में और भी कोई P2P company है जहाँ पे double digit returns भी आते हैं
बिल्कुल आते हैं सर
1 year
बिल्कुल.
So and LiquiLoans क्यों इतना कम दे रहा है, how LiquiLoans is better than them and why the returns are lesser than them?
So I'm saying, sir, I'm not saying it is that we are better or they are better. I'm saying आप अपना business model चुनिए. Within P2P, there are various business models, right? Some are doing merchant loans, some are doing business loans, some are doing payday loans, some are doing SME loans, right? So the risk, obviously, with higher returns, will have higher risk, right? So I'm saying, depending upon your risk appetite, you have to choose the borrower segment you want to get into, right? So we had a choice. See, what segment should we look at? So I'll give you again, this is the same example I give, so please bear with me, is that when an Indian investor starts investing in equity markets, right, he's always told to invest in large cap blue chip companies.
Right.
But typically what happens is that you look at mid cap return or small cap returns over the last 3 months, you'll say companies are growing at 30%. Let me put all my money here. After 6 months, you'll see you've lost 20% of your capital. Typically, that's what happens every time. It has happened with me also, right? So I'm saying, we are giving you sort of large cap sort of borrowers, right? Now there are business models which give you small cap, mid cap also borrowers, but the risk is higher. So even though you may make higher returns there, you have to deal with, there is a lot of uncertainty and risk in those set of models. Right. And now I'm not saying we are better or they are better or we are worse or they are worse. I'm saying different P2P companies have different business models. You should evaluate where you see, when you're investing in fixed income, most importantly, you want capital protection. And you want consistency of returns. Wherever you feel is your sort of risk appetite, you should invest there.
Thank you. We also have Neeraj who has joined in. He's an experienced investor. So he had a lot of questions, or has he? Yeah, Neeraj.
Yeah, Swapnil, I'm there. Yeah, hi, sir. Sir, I was having one question specifically because 8% I am getting from a credit. I will say it's a credit risk which I will be carrying in my portfolio.
Okay.
And there are banks which are giving me, to name it, IDFC First Bank on a senior citizen 7.75. So for 25 basis points, somehow I am not able to allocate money I had allocated when the difference was higher. But now when the Reserve Bank had already started raising the rates and they had started giving me 7.75 because that's what even Swapnil and we were discussing.
But 7.75 sir, on what is the tenure here for you?
So the beauty about their product is that any tenure you take it, and if it is a senior citizen account, you break the FD. So what I normally do is I keep it for 10 years because there is no foreclosure charges. I enjoy the flexibility, and the moment I log in their app and I want a liquidity, I redeem.
Achha, so you can redeem at any given point in time.
It's a bank FD, sir. It's a proper bank FD.
No, I'm saying there will be some sort of penalty also. No, it can't be that you redeem and you will have the. If that is the case, sir, I mean.
I appreciate your concern, and I'm an asset allocator. That's what I'm trying to say.
Sure.
So I keep on allocating money here and there. So what it is, this bank is having a senior citizen clause, which clause gives a immunity to any sort of foreclosure charges.
Okay, perfect.
So it's maybe a loophole or something like that, but it works for us. So when Swapnil and I was discussing, we said that if the yields goes up, then we will see. Otherwise, 25 paise ke liye kyun? And second thing, another thing, I just want to understand the underlying assets, what you are having right now. Okay, it is having a shelf life of 6 months, 8 months, whereas you are giving me a liquidity of 2 days.
Yes.
So the equity, how you manage the liquidity part? Like if sometime it may happen that a lot of redemption, I will use the word redemption comes or withdrawal comes.
Yeah.
It can be, the 2 day can be 10 days like a mutual fund.
No, sir. So typically what happens is that we have a very, very robust and strong secondary market. Right? ऐसा कभी हमारे साथ हुआ नहीं है कि आपने you place a request for redemption and within minutes someone else will take over the portfolio or will allocate fresh loans. So you not finding a borrower or not able to redeem within T+2 days, that is more or less has never occurred with us, and going forward also will not occur, because typically the scenario that
So here I am more concerned about a event which is triggering a redemption across industry. Okay, so what happens that it's not about LiquiLoan or a particular P2P.
Yes.
Some persons, like you rightly said, that there will be certain persons who are be high on credit and which will be offering higher yields. Okay, as some challenge happens over there, or some event happened because of COVID or something else.
No, I'm saying, I understood your question, sir. So you are asking कि liquidity ALM manage कैसे होगा ना? आप वो पूछ रहे हो ना?
तब उसमें क्या होता है कि पूरा across industry में ना इतना redemption आ जाता है, because तब अच्छा बुरा बढ़िया सुंदर कोई मेरा पैसा बैंक में चाहिए.
नहीं, बिल्कुल sir. I'm not debating that at all. I'm saying that if you, again, I just mentioned this previously also, कि out of 100 rupees, out of 100, 30% is in liquid, everything else is in 1 year plus lock-in, right? So वो 70% तो आप ले भी नहीं सकते अगर आप चाहे तो भी, right? Now the question can be कि 30% liquid है तो 30% redemption हो सकता है ना at any given point in time, correct?
Yes.
So 30% में से I'm saying कि 10% जो है 100 में से 90 rupees ही आपका डिस्बर्स होता है. 10 rupees मेरे escrow में कैश में पड़ा रहता है, which is not a provisioning that I have to maintain, but this is something that I have maintained because I have a liquid composition, right? So 10% is always in cash, and typically 15% repayment comes back to me month on month, right? So I'm saying 25% के आसपास out of 30% is covered. Now, like you said, if there is a run on the bank, obviously I will also be affected. So almost 85 to 90% of the liquid portion is covered, right? And remaining 10% obviously you will get as and when the borrower pays you back. ये हमने, like I said, typically COVID के time पे हमने देखा है ये कि हमारे साथ भी रन तो नहीं हुआ था, but redemption pressure was high. Almost मेरा book redeem होता है 2%, 3% month every month. But
I am being little more devil's advocate to the reason for that is I have lived through ICICI 2003 crisis. When there was a bank was solvent and the RBI governor has to come in picture and say कि भैया सब बढ़िया है, and still there was a line. So these are the crisis type of shit. And why we are discussing this? You one thing is good that you have a cap of 50 lakhs that a single PAN can put. But still ये मतलब एक discussion हमारा हुआ था कि मतलब this is something like which is restricting the flow to from at least area of concern, you can say.
Which one? The asset life ALM you're talking
ALM
about,
as well as the spread is not there, sir. 25 पैसे के लिए क्यों risk?
So spread sir मैं बताऊं, again I'm saying that again typically you will enjoy 3% sort of 300 bips differential over typical fixed income products. I agree that rates have gone up. We will also increase the rates. It's not that we will. So again, sir, if I have to become, like I was mentioning, if a Bajaj Finance FD is at 9%, I'm no longer attractive, right? So I will also increase the rate, but it may not be an immediate knee-jerk sort of reaction. You will see typically And I personally believe the rates are going to go up 50 basis to 100 basis easily over the next 6 months, right? And we'll also continue to increase the rates. You will always see a 2 to 3% spread over typical fixed income products. And again, because you're an asset allocator, like I'm saying, there are थोड़ा बहुत पैसा तो हमारे साथ रख ही सकते हो. Almost 90% तो आपका दूसरे में होगा ही. 5-10% allocation with me, I think safely, comfortably you can do.
नहीं सर, ज्यादा भी करना है, लेकिन ओनली वही मैं बोल रहा ना, वो कंफर्ट जो होता है ना इन टर्म्स ऑफ कि ये डेट में क्या होता है सर, वॉलिडिटी चलती नहीं है, इक्विटी में
नहीं, आई एग्री सर. सो आई एम सेइंग आप दो तीन पिलर्स देखो ना. ये आप देखो कि हम कैसे बोरोवर्स को केटर कर रहे हैं, राइट? सो बोरोवर क्वालिटी इज वेरी वेरी हाई, करेक्ट. आई एम सेइंग माय अंडरराइटिंग, माय कलेक्शंस एज आल्सो, ये सब हमने देख लिया है लास्ट 5 years में. वी सीन द वर्स्ट ऑफ टाइम्स आल्सो, and we continue to maintain the sanctity and pristine portfolio for the last 5 to 6 years. So I'm saying borrowers for me typically is not an issue. Credit quality of borrowers I have solved, right? What is the kind of borrowers that I'll be looking out for? Where is the industry headed? Also, more or less, I know. Right now, I'm at 2,000 crores. Easily, I can scale this up to 20,000 crores, but just doing the same sort of business.
Okay,
right?
So yeah, just my humble for my understanding, like
Yes.
Bajaj Finance, when they start, they had actually taken a good advantage of the credit card underwritings what cards used to have. Something on that side gives the assurance if something goes bad or something. So the card company also has some cushion, na?
You're talking about.
Initial
can you say that again, sir?
Yeah. Initial days, what Bajaj was doing, because of the risk management, what they used to do, they used to block the credit limit of the credit card.
Okay.
So the risk doesn't lie actually to the Bajaj, and that's how they grow initially their book, and later on they start doing all other things. So वैसा अगर कोई प्रोडक्ट आता है जिसमें कुछ मतलब फिर वो क्या 25-50 पैसा ऊपर नीचे चल जाता है, लेकिन बाकी तो
बट कार्ड्स तो हमको आरबीआई ने स्ट्रिक्टली मना कर दिया. पीपीआई वाले सब तो अभी आके सब बंद हो गया. So that is something that we can evaluate for the next year or so. But it's a good suggestion. There's no doubt there, sir. But यहाँ पे I'm saying हमेशा safety तो है ही. Again, safety because I personally believe कि अगर company's revenue is wholly solely dependent on you making your return. आप कुछ भी करो, आपको मतलब worst case क्या होगा कि आप वो growth जितना आपको एक्सपोनेंशियल ग्रोथ चाहिए कंपनी को शायद वो नहीं मिलेगा, राइट? बट इन्वेस्टर का पैसा हमेशा सेफ रहेगा, बिकॉज अगर आप कुछ भी ऊपर नीचे करोगे वो आपके ही फीस पे जाना है उसको. And I always say this is a 1 or 2% game, right? A 1% increase in NPA decreases my profit by 50% or 33% for that matter, right? A 1% increase in collections again decreases my profitability by 33%, right? So this is always a 1% game, right? So typically you will see all these things play out when people get very, very aggressive. People get complacent. They want to grow their loan book at a pace that which they are not comfortable with. Investor funds come in. So there is pressure of deployment. We have stayed away from all these things, right? Because we are very, very clear कि business करना है तो ऐसे करेंगे, वरना unnecessary मेरे को तो growth चाहिए नहीं. I'm comfortable growing at 6 to 10% month on month. Even if I don't get that also, I'm okay with, right? So I'm saying as long as I'm maintaining the underwriting sort of mechanism, if my ALM is correct, if my collections is correct, if my underwriting is correct, this model typically will not see too much of deviation from current numbers.
Okay, thanks. Thank you.
We can still have questions coming in. Any of you have questions, please?
Swapnil, it is almost answered.
Yes. There are answers, but I'm still waiting for a few more minutes before we can wind this session up. Sandeep, there was, I think, LiquiLoans was also linked to this Bharat Pay, right, for the 12% club. So how different is 12% club different from LiquiLoans?
So again, sir, like so there is Cred Mint also, which offers you 9%. There is Bharat Pay, this 12% club, which we were doing. Now we are not doing anymore.
Okay.
But there was this 12% Bharat Pay, and they are doing it with other NBFCs now.
Okay.
Where these are sort of typically their own set of borrowers, and I'll tell you Bharat Pay first. So this is their, and credit also the same thing. Own borrowers, own lenders, different business model. In 12% club, these are all merchant loans. These are that investors are also merchants, borrowers are also merchants. These small mom and pop shop, kirana store owners who require a loan or are ready to invest and get 12%. So again, there is some amount of risk with this कि कल COVID आ जाएगा तो सब shops बंद हो जाएगा तो आप कहाँ से return हो, right? Again, that is a risk that you have to consider. Again, 12% look great on paper, and I'm not debating that, right? But again, it's a model which has inherent risk. Similarly, Cred Mint, for example, again, they are using my algorithm, my infrastructure to sort of build this out, right? But they give out personal loans at almost 18% plus IRR, right? Again, anything personal loan at about 15, 16, 17, 18% does carry some inherent amount of risk, right? So that's why they are offering you 9%. So again, so there are various products available, right? And this is, and I have seen when we started LiquiLoans, right? There were like 3-4 companies that were there in the alternate fixed income space. Now there are 50-60 companies. I'm sure your inboxes will be flooded with new companies every day, right? But just, you know, my sort of only sort of 2 cents on this is that be sure of the business model, be sure of the underlying, right? And be sure of how your capital is protected.
Right.
If you're sure of these things, you can invest anywhere you want, depending upon risk capital.
Fair enough. Yeah. Yes, ladies and gentlemen, any more questions before we can finally say thank you to Sandeep and the LiquiLoans team? Do we have any more questions? Any question are more than welcome. You are existing investors of LiquiLoans, so any question from you is welcome. So what new we can see from LiquiLoans? Any new tenure products coming up or any interest rate products coming up? Kuch naya aa raha hai?
So you will see, sir. I mean, obviously you will see. So typically these are हमने अभी तक तो खाली vanilla products किए, right? And now I think because हम 5 साल हो गए यहाँ पे, so there is also room and demand for newer products, right? Just to expand your product line at least. So you will see some sort of movement there, some sort of MLD product, ICD product. NCD तो हम करते ही हैं, but there will be more products available to you. And over the next sort of 3 to 6 months, we'll roll that out. Once we are sure of the merit of this.
Or any possibility ये 50 lakh का limit बढ़ जाएगा from RBI? Is there a possibility or any discussions?
Again, off the record, उन्होंने बोला कि 1 crore करने का plan है, but RBI is quite slow moving that way. So उन्होंने बोला था last quarter, तो typically again 6 महीने के बाद ये हो सकता है. I think around in March, April तक you should hear some news of limits being increased.
Fantastic. So yeah, people, any questions? So thanks a lot, Sandeep. I think thanks for sparing time on a Saturday.
No, my pleasure, sir. My pleasure.
Answering the questions. And why this session was important, because we did the last session some 8-10 months back, and that was for a very basic on what P2P is. And this is for all our existing clients. A lot of them could not attend. Still, they had sent me the questions or apprehensions they had, which I asked you during the session. And so that getting their questions resolved is like something like which gives them additional comforting factor. So thanks a lot for sparing time and answering all the questions in detail. And thanks a lot, Shivani, for arranging this, and thanks to all our clients for sparing your valuable time and being over here. It certainly means a lot. And still, before last 1 minute, if you have any questions, or else we can just say goodbye.
Thank you, Swapnil sir. Thank you, Sandeep.
Yeah. Thank you. Thanks a lot, everyone.
Thank you.
Thank you, sir.
Guys. Bye.